Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. In this video, I'm going to share the research that's out floating around in the past 24 to 48 hours on Twitter and major platforms. There's a lot that you need to be aware of. And I'm definitely going to be talking about things not covered on any other channel. Make sure you like the video and subscribe for more content. With that, let's run the numbers. 24 hours ago, we saw Bitcoin come down like this, and right now it's up like this. Bitcoin crashes and crypto crashes feel like this. My goal with these videos is to save you hours and hours of time by just collecting the best stuff on social media. Zero Hedge says there's a big jump and a new record high in Bitcoin hedge fund net shorts. What this means, there's a lot of shorts in the market. Shorts have the expectation of prices coming down, and when we look at MicroStrategy, there are currently $6.9 billion worth of shorts, constituting 23.14% of its market cap. And when we look at Riot and Canaan and Core Scientific, Coinbase, Marathon Digital, we can see the shorts are playing in there. But why are the shorts playing around? We've seen historically, whenever the federal funds rate starts to flatten out and starts to come down, that's accompanied by negative price action inside the stock market. But JP Morgan has pulled the rug on the shorts yet again. It expects a November rate cut, not a July rate cut. Now, what does this mean, and how does it affect you? All markets are intercorrelated and interconnected. What happens with the major indices is really important. When the federal funds rate has come up, starts to flatten out and then comes down, we typically see the trading days from the first rate cut to the S&P market low versus the S&P 500% change from the first Fed cut to the market low. It takes about 195 days, and the S&P tends to come down about 23.5% from that easing. And that's something to bear in mind. So what JP Morgan has done has said, shorts, just chill out. The rate cut is not coming exactly when you want it to come. Now, what does that mean? The shorts will start to need, because the shorts make money when the market comes down. But this is being pushed out into the future. This is not happening now. This is happening later. So all the shorts will now need to start covering. That means they'll need to start buying. This is really important to understand. Meanwhile, in Bitcoin and crypto news, Bitcoin has a larger cap than JP Morgan Chase, Bank of America, and IC Bank of China. In fact, it's more than all of them combined, coming in at $1.37 trillion. In other news, it took gold ETFs 5 years to cross $15 billion, and it took Bitcoin ETFs 5 months. Whoa. One thing that you'll notice, as the gold ETFs drew more and more money, the price of gold went up and up. My focus with this analysis is just to save you hours and hours of time by picking up the best charts across the entire internet. And when we look at Bitcoin, supply held by entities with a balance of 100 to 1,000 Bitcoin, we can see that those entities are increasing their holdings. And when it comes to Bitcoin holdings since inception, we can see that since inception, it was about here. Now it's about up here. We can see that there's a little bit of growth there. And a lot of the Bitcoin ETFs have just reshuffled the Bitcoin between the different funds as the Grayscale Bitcoin Trust has been coming down. Why is that? Because the fees are so damn high. The Hong Kong ETFs are still in that bunch, and what have we seen? The Hong Kong ETFs are starting to grow, but market conditions always make people sell, so just be aware of this. What about when we look globally? We can see there's currently in excess of 1,031,973 Bitcoin held by total global ETFs. When you look out at the news and social media, you'll often see so many contradicting things. Right at the moment, from cycle bottom to cycle top, we are here. I thought I'd put this thing, you are here, because it just helps to understand there's potentially a lot more incoming. And we're in an election year, and the markets don't typically just go belly up in election years. It's not good for politicians, and of course, politicians act in your best interests. You may have been seeing charts like this around. Realize cap for New Wales. This is the 2014 cycle until now, and we're looking at 2020, and here we're looking at 2024. After this period in 2020, the prices just went exponential. People are expecting prices to go exponential now. Maybe this chart will help to just show that a little bit better. And after the halvings, we typically see this exponential price action, but not before things come down. So just bear that in mind. And have a check out at this. $1.1 billion worth of Bitcoin. And what's the transaction fee? Oy, yay, caramba. It's $105. You're not going to get that at the bank. I collect all of these charts because I want to give you a bit of an insight into the sentiment that's out there. Now, what is this chart saying to you? It's saying prices are going up. You've probably seen this one around as well, an inverse head and shoulders. Now, the inverse head and shoulders and technical patterns typically play out about 50% of the time. Was this an inverse head and shoulders? It depends where they draw the lines. But what is the chart telling you? What's the narrative? What's the story-based analysis behind this? Well, it's just basically saying Bitcoin is going up. What is this chart telling you? Well, it's telling you it's very colorful. And it's also telling you it's going to go up and it's going to come down. But what the heck is Bitcoin actually going to do? When it comes to the statistical interpretation of charts, you've got to be really careful about what people put out there. You can see here, 134 weeks, 134, 134, 134. Oh, this must be spot on. But hang on a second. What is this actually telling you? It's telling you there's some intercorrelation and interdependency between the S&P 500 and Bitcoin. Tick the box on that. That is correct. And what about this? This is the top 134 weeks. This is the top 134 weeks. This is the top. You get the idea. But where is that line drawn from, and how does it relate to this? They look pretty damn random to me. It looks like a story-fitting price action. Story-based analysis is terribly common. What is this particular chart telling us? It's telling us that the last halving saw just up and down and all over the place price action, and that we've just had the next halving, and it's expecting up and down and all over the place price action, and then upward momentum. But you can see this upward momentum is quite short compared to that. Why is that? Because the chart doesn't have more numbers on this side. That's simply it. For many years, I taught first and second year statistics and had my students analyze price charts and analyze charts just in the media. You'll always find that when you come to analyzing charts, typically people have a story and they want to communicate that story. What are we looking at here? OBV, on balance volume. What are we seeing here? What's the chart telling us? Price is going up. That's what the chart is saying. The key to understand, some stories are better than others, and this is quite a good story. When you look at the previous all-time highs, you can see those here. When price crosses that intersection of previous all-time high, it does tend to get a little bit choppy. It got choppy there. It wasn't too bad there, but it's quite choppy here. Now, what happened after that? We had a rally. Now, don't forget, this is on a log scale. This is not an arithmetic scale. You always want to do your long-term analysis of Bitcoin and crypto because it's exponential on an exponential scale, which is log scale. Let's look at the same chart from somebody else. You can see the all-time high here. All-time high, that's ATH. And what are you seeing here? That intersection, and that intersection. One of the things that you need to be aware of, you must pick the correct trading pair. This is Bitcoin versus the US dollar, but not all charts are created equal. That's something we talk about in Level 2 standard certification. This chart has a bit of the same conversation. Consolidation for X number of days. Uptrend, RSI is trending upwards. That means more price potential incoming. And this analysis is done on Bitcoin on the weekly basis. There can be lots of signal and lots of noise inside charts. The thing when it comes to signal and noise is to understand how different things compare. You can see this price action that was highlighted by this author. You can see that he's saying, oh, this is a cut of a downtrend. Okay, that's pretty cool. And where is this cut occurring? Well, it's about midway on that, which would mean it would be about there, but it's up about here. Now, what is this chart actually saying? From this, it's saying that price is going upwards, but it's not communicating a consistent story. The key is to separate noise from signal, and there's a lot of noise out there. Now, what is this particular chart saying to us? It's saying that there's a ceiling here, it's saying there's a ceiling here. And notice how this is drawn not to the wick, but to the candle body. Also, this is drawn to the candle body and not the wick. That's good, that's consistent. And if we go from the ceiling up to that all-time previous high of the last cycle, it comes up to about there, 161.8%. If that is done, we would expect 174,000 as a target for Bitcoin. You can see that there's so many interpretations of exactly the same thing. What is Plan B up to? What mischief is he up to? He's saying, oh, baby, we got a red dot. And look at this, look at this. There's a lot of ways of interpreting things, but what happens when we get a red dot and this drop off? Well, you've got it. Prices go up. When Level 1 and Level 2 standard certification is not applied to charts, there's a lot of interpretation. You can see here, bottom, bottom. It looks pretty good, doesn't it? Bottom, bottom. But if you were actually drawing the bottom there to the bottom there, the line would be down here and not up there. Students inside the masterclass understand this incredibly well. Now, what is this trying to tell us, this particular chart? It's saying, here's the halving. This is really good. The halving is a very key point in the data set. You must look at the chart from the halving. And what is it saying there? Well, it's saying something pretty interesting, but it's saying prices will go up. Now, what is this particular price action? Well, that's a fractal. Where did it come from? It came from here. Knowing where a price projection path is coming from is also really important. And here they're saying if this particular price fractal plays out, we would expect price to go up to around 225,000. Remember, this chart did exactly the same kind of analysis and came in at 174. The point here is that people can look at exactly the same chart and get different figures, and that's okay. The figures are up, so it's all good. What are we looking at here? The Bitcoin bull run still has room to go according to the Chaikin money flow Bitcoin indicator. So what does this mean? We're seeing a flip here in the Chaikin flow, and what does that mean? And what the hell is the Chaikin money flow indicator anyway? The CMF is the sum of the MFV over a specified period of time, generally 21 days. And it's got this equation. Now, what the heck does this mean? Just look at a candle like this. Here's the high, that's the H. Here's the close. I'm just pretending that this is the close. Here is the low. You can see that the CMF doesn't involve anything to do with opening price. And let's just do a really quick analysis. If that high was 11, the close was 10, the low was 6. What are we seeing here? The close minus the low. Here, that 10 minus the 6. Well, that's 4. And what about this? The high minus the close. We can see that's 1. So what is 4 minus 1? That's 3. That's the start. And what about this? High minus low. This is just this period or this area. Well, that is 5. What is that? Well, that's 60%. Now, what are we saying? This has a 60% volume or impulse move inside it. But what's the volume? Is it high? Is it low? And how does it compare to the average volume over time? Now, what does this particularly mean? If the volume is very high and the distance between this indicator, well, if the close is up high here, it will create a strong fraction, a fraction that tends away from zero, and that will push this value up over time. So therefore, how do we interpret that? A positive value for the CMF means that there's an accumulation phase going on. It indicates that buying pressure is stronger than selling pressure. Here, we're seeing buying pressure. If the close was at the low, we would see a zero here, and that is a problem. So looking back on this particular chart, we can see the CMF is showing accumulation. It doesn't necessarily point to a high, it just shows that accumulation is occurring. I just recently joined up to StockTwits. I would suggest you check it out. It's really quite interesting, and I want to provide a bit of an analysis that I did over there. This specific chart has a lot going on, but the concept is this is a halving, this is a halving, and this is a halving. Post-halving, we always see this positive price momentum. Will we see it this time around? Well, in all likelihood, yes. And when we look down here to the Puel multiple, as well as the MVRV score, we can see that around here, we typically, when we get up to a point when a top is starting to come in, we tend to see these green lines. This might be a little bit difficult to see that green line there, but it's certainly there. And these red lines represent capitulation. What are we seeing right now? Well, we're seeing no capitulation, a very low value down in here, as we've seen, and also this drop-off, as we've seen in past cycles. So it looks pretty good. What we understand as a global family, CTKS structure determines the price waves because price is always moving in between structural support and structural resistance levels. In an up wave, you're going to hit structural resistance and be forced back to structural support. And this dance goes on and on. The quite critical thing is just what direction are we going? The direction is up. But a lot of people would say, hey, Ken, what about that huge sell-off that we saw on Friday? Prices weren't seen since Tuesday. Well, it really comes down to the fact that Bitcoin cannot escape the stock market's gravity. Pushing up your financial literacy is really, really important. When we look at bond yields, we saw that they absolutely spiked. The DXY absolutely spiked. When the yields and the dollar spike, what happens? It brings down the major indices, and that blue line is Bitcoin. Look at what it did to gold. It absolutely whacked it. What happens if Bitcoin gets whacked? We know that no crypto alt can escape Bitcoin's gravity. That's Rule 45. But can we prove that out? We definitely can. You can see when the yield spiked up and the DXY spiked up, what happened to Solana? It came down because Bitcoin came down. Understanding the association between different charts is called intercorrelation and interdependence, and it's a critical skill that you need to master. You can see on Ethereum, Bitcoin, that blue line, you can see how closely they're related, and it's not surprising. Ethereum is the number 2 crypto in the market. But when the yields in the DXY spiked, look at what it did to the alts. The alts absolutely bled. Hopefully, if you're wondering why you should even bother looking at the US 10, the US 2, the DXY, well, hopefully I've proven the point that if you don't look, you can get caught by surprise and just be left scratching your head. What just happened? What we need to do is to look at charts in a completely different way. Applying the CTKS method, which is a standards-based method which you can learn at CTKSMethod.org, we can see that there are structural levels that play out inside price history. When total crypto market cap couldn't get above and maintain and retest and go positive above this $2.561 trillion structural level. And structural levels are drawn across all of price history, not just recent indicative price, which will RIP your money. it couldn't hold there. It came down to the next one. And because yields were spiking, the US2, the US10, the DXY, the Japanese yen, the euro was coming down, and the Aussie dollar was coming down. That all threw negative price momentum on gold and silver and Bitcoin and the indices, the Dow, the Russell, the S&P 500 and the Nasdaq, but it all gets caught by structural support levels below. That's why you need to know where they are, both above price action and below price action. Because what you see, and we see this all the time, this channel has been going for many years, when we get a negative fresh air gap, that means that there's not a lot of clustering between structural levels or CTKS levels. When there's not a lot of structure between the levels, you can see sharp drop-offs on price, and this happens all the time. But they will also get caught by the safety nets and rebound, seeking to retest and either gain strength to come up or lose strength to underside retest and go down. So far, the crypto market is gathering a degree of strength. Structural lines are on every price chart, and when we look at Bitcoin, we can see that Bitcoin came up and just couldn't get above the 71,791 mark. We do not draw random lines of structure. We know where the structure is. We have X-ray vision on the markets. Total and Bitcoin all move together, so just be aware of that. What we've seen is Bitcoin's price just come down because it has all this substantial structural resistance around all of these specific levels. And it's had a lot of trouble getting through it. It really tried, but it went, oh brother, I give up. But of course, JP Morgan coming out and pushing that rate cut expectation down to the later part of the year will have all the shorts beside themselves. Just be aware, the price even in an uptrend will go up and it will come down and go up and come down, and it will always move between dense structural resistance and dense structural support levels. This is something that you need to understand. When we look at Solana couldn't hold above that 170 mark, and of course it couldn't because the yields were spiking and the DXY was spiking as well. When that occurs, we expect negative price momentum to be caught by structural support below, and we can see that 157 level has reacted very nicely with Solana. Now, what these structural levels do is they allow you to look right from price, and typically how structural levels, how people create levels inside the market, they look left and say, oh, there's a level here, it must be structural. But they could be drawing structure across a period of 7 days when the entirety of that chart has been just running for many, many more than that. So they're only getting a very small percent of the vision of price. You need all of the vision of price if you want to make money. Looking through the Tier 1, Tier 2, and Tier 3 charts is really important. And Art said, I can look at the Tier 1 charts now and mostly determine why the market is moving up or down, and then digging into the Tier 2 and Tier 3 charts to verify it. This is absolutely the way to go. Art says the CTKS method is very solid. Just watch again and look at the total chart and how price fell through that fresh air gap and was caught by support. Amazing how these Stanfield levels and lines catch price. Thank you, Art. To get more familiar with the CTKS method, there's a cheat sheet on ctksmethod.org, which is free and you can download it, so you can start to look at the Tier 1, Tier 2, and Tier 3 charts. And just a quick update for the service members, all of the Tier 1 to Tier 3 as well as the Dow and Russell have been released. There is also a post inside the service that covers off all the up, down, and neutral paths for all of these charts inside there. That is inside the service. As a bit of a bonus, if you're inside or trading MicroStrategy, one thing to be aware of, from 1713 up to 1933, there's just a barrage of structural overhead resistance. We have a degree of support below that, but you should be aware that there's a massive amount of structural resistance there. But hopefully the liquidations in the shorts will be enough to push it through. Before, I mentioned those 3D price paths. That's what we draw out inside the service. And I'm making sure that I capture all of those at the start of the month so you can get a better idea how they progress inside the service. And of course, I'll share them from time to time in the public channel. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.